I've been a bit unfocused lately, so I'm just reviewing my Bitcoin channel. I tried to figure out what would be most logical on the Bitcoin channel by doing a lot of study. This is the solution I found, and would like to clarify. One thing that traders should keep in mind at all times is that charting is a science to some extent. As an example, a Fibonacci retrace is quite precise. The way it is, isn't it? A Fibonacci retracement and a high to low pivot are all you need. A science, in fact? It's a precise figure. It gets trickier than that when you're trying to draw trend lines. To give you a better idea of what I mean, I cover some of these topics and more in the Winning Trader series. Bitcoin and the entire crypto asset class are expected to benefit from the SEC's approval of a spot Ethereum ETF, according to Michael Saylor, executive chairman of MicroStrategy. The SEC's clearance legitimizes different crypto use cases, including tokens, NFTs, and FI. As a result, a new asset class is established. According to Saylor, who highlighted the effect of this development on the What Bitcoin Did podcast. With its growing legitimacy and political backing, he thinks Bitcoin will be the leader of this new asset class. As of Tuesday morning, 3 unique addresses have received the MT. Gox money, which were formerly held in a single address totaling over $9.6 billion in Bitcoin, according to on-chain measurements. Also, Donald Trump owns more than $10 million worth of cryptocurrency in his portfolio, principally propelled by the Trump currency, as reported by Arkham Intelligence. Consequently, I spent the weekend contemplating where these lines might be most useful. Basically, what I drew is this parallel where you're taking your exact low. I'll bring up my drawing tool again from right here to right here to right here, and then up here. Then you can see how we broke above. Stopped, touched it, and it's staying above. This is the most logical option, in my opinion, when it comes to the art of trendline and channeling drawing. Therefore, I intend to go in that direction moving forward. As I mentioned last week, Bitcoin's chart outlook will remain bullish so long as we avoid daily closes below this level. Once again, the charts show no discernible trend. Their bias is non-existent. They are unprepared. There is no story they are attempting to tell. It stands as it is. We currently have the channel that was dipping downwards. In general, downsloping channels break to the upside. Keep in mind what I've taught you all. Keep in mind that I'm just giving you an estimate here. The actual percentage is much lower, but roughly 70% of the time, downsloping channels break up. Excuse me, but here is the positive side. This one broke to the upside, and here it is. A portion of that increased likelihood so exists. Just like we saw on the 10-year yield chart, which looked like this. There are upsloping channels. It was like this with the 10-year yield. They usually break down. The 10-year yield followed this pattern. Actually, if I have sufficient time here, but we can discuss that chart. It is uncertain whether we will. However, I stand by my original point. The odds are still in favor of a positive outcome at these moments in time, provided that we maintain where we are and refrain from closing back within this channel. I understand, considering Ethereum. The double top is still a target for Ethereum's upward surge. What a stunning channel breakthrough we had. We know it. Like, this kind of precipitous breakout doesn't happen very often. That's an outstanding breakout. This high pivot at about 4,100 has not been tried yet, which is quite intriguing. I am considering the chance that we could hit, therefore I am looking into it. In fact, I believe we could penetrate it and reach 4,200. However, I must admit that if we reach $4,200 this week, I may begin to consider executing a short. All right, keep in mind that my perspective on Ethereum is completely unrelated to this because I am a shorter-term trader. It could be $10,000 in a year, 2 years from now, but I don't know for sure. For my part, I'm a short-term trader on the lookout for little movements in the market. So that I don't receive any hate mail from Ethereum supporters, I'll just clarify before I run off with my money. I understand. If you look at the gold chart, you'll see that it has broken out above this trend line. You may have seen that we did provide an update on gold yesterday. Today, we are also up somewhat. However, I'm wondering if this is the beginning of bearish consolidation on oil. Pardon me, but I'm on gold. What I mean is, are we now beginning to do this and remain below this line for a dip? Having broken through here? Plus, the likelihood of that happening is something I am not familiar with. A pattern like this would be considered immature. Consequently, the pattern is still immature. The immature state differs from the mature state in that the immature probability is equal to half. As you become older, you begin to lean heavily in one direction, perhaps 70%, 30%. Even the pattern is immature at this point. If we remain below over the next few days, it will mature, and you will begin to favor the downside. Just a quick aside, PCE data is released every Friday. What I want to know is whether this continues into Friday, and if it sets the stage for a negative or positive movement in gold prices. Will we see an upward breakout? Here we have the SPY, which stands for the SP pre-market data. Once again, the SPY is the name of the exchange-traded fund that follows the SP 500. Instead of trading the SP futures through a futures account, most traders trade that. Okay, so this is what happened. The market finished up beautifully on Friday, and then this happened, right? Friday night sideways activity brought us to this point where we closed. Then at 4 in the morning on Tuesday, we set out. I should rephrase that that's when the futures market opens for business, when trading begins. In the pre-market, however, it becomes clear that the big dogs were eager to launch this market. My best assumption is that this is so they may sell to the public at a higher price point, where retail investors will be able to buy more. As for the morning session, we're still net positive, but we've retreated a touch and are now flatlining. Okay, so some stocks are changing hands, but now I'll deliver on my promise to explain the rationale behind a 43% loss in the SP 500. Believe it or not, this is the material that I'm sitting on while enjoying the weekend with my family and kids. I just can't help myself. For some reason, every time I look at a chart, I can't help but be lured back to them. And this is one of them that I discovered over the weekend that truly amazes me. Thus, our next move is up to us. Are you saying that this is the SP 500 chart that you've been using, tracing back to 2007? Thus, this is your 2007 high, and this is your 2009 low. Right now, look at the connector. This brings us to our second point for the year 2021. We also know that as of Friday, we tagged this trend line for the third time, and that we soared to the level of around 533 on the spiders, whereas in this instance, it was about $5,300 and change on the SP. Will we be able to break it? We will discover it, but it is not the main point I want to make with this demonstration. Our next step is to link the 2009 low to the COVID low. Looking at the decline here during the Great Recession and then doing a decline here is what I want to demonstrate to you all on this. It spanned the last months of 2021 and the first half of 2022, our subsequent bear market. We are interested in learning the percentages of these declines.